Today we are going to learn final account of banking companies, and for that purpose I want to share something that last lectures we have already started the final account, and the same things we have to continue right now. Now friends, first of all we will study the final account, the final accounts of banking companies. Last lectures we have discussed the format about the final account. Now, this particular final account includes number one, we can say that it is a balance sheet. Balance sheet, there are total 12 schedules are there, and one more part is there, that is a profit and loss account, and there are total four parts are there. Schedule number 13, 14, 15, and 16. These four parts. The balance sheet 1 to 12 and profit and loss account 13 to 16. So 1 to 16, these schedules, if you know, you can easily understand the final account. It's very simple. Now, generally, company account is totally different. Company accounts balance sheet is totally different, and banking company's account balance sheet is totally different. And for that purpose, we should study the balance sheet format and profit and loss account format properly. Unless and until if you are not aware about the format and schedules, we cannot solve the problem. So you should know about the what will be the format of the balance sheet and profit and loss account. Now friends, it is a vertical format. Now today we will talk about the profit and loss account only, and there are total four schedules, schedule number 13 to 14 that we will discuss. Now friends, if you see that the format in that, it is a one type of form, and that particular form is called as it is a B form. It is a B form of the balance sheet and profit and loss. The form number B, it is considered as a profit and loss. Now friends, format of the profit and loss, it is in B form that you have to memorize, because sometime it may become as a objective question. Now we will discuss only profit and loss. We will solve profit and loss accounts problem today. Now friends, whenever we will prepare the profit and loss account, always we will prepare at the end of the year. So for the year end is there. Then after that, if you see that the format, basically we will consider particulars, schedule number, and current year amounts, figures. And now if you see that the any kind of banking company's final account, they are provided current year and previous year figures also. So here may be format of the previous year figure also. But in general banking statements, if you see that any kind of banking statement, last year figures and current year figures also provided in the balance sheet and profit and loss account. Now friends, let us discuss about the profit and loss account. Now here, this particular format, profit and loss account. Now this profit and loss account divide into four schedules. Now what are the four schedules are there? First is income. Under income, interest earned. It is a one of the important element under income. And this particular interest earned, it comes under schedule 13. It comes under schedule 13. These things you have to keep in mind. Then under income, one more item is there, that is other income, and it is considered as a schedule 14. So there are two schedules under income, in interest on schedule 13 and other income schedule 14. So these things you have to keep in mind. Then after that, we have to find out the total of our income. Now it is a banking company, so you have to consider what kinds of income bank can earn. Now we will consider about the banking point of view. We will not consider about the customer point of view. We are the bank and we are earning the interest. We are earning the other incomes. Now what are the other incomes? What kinds of interest earn, that we are going to learn. Then after that, next number number two, it's belong to expenditure. It's belonging to expenditure. Now under expenditure, there are two kinds of expenditure, that is interest expended, that schedule is called as a schedule 15, and one more expenditure is there, that is other operating expenses, that is schedule number 16. So this particular schedule, these two schedules belong to expenditure. So these things you have to keep in mind. One more item is there under expenditure, that is provisions and contingencies. Provisions and contingency. But friends, there is no schedule for provisions and contingency. If it is there, we have to show here, but there is no schedule for provisions and contingency. So total of this expenditure, total A is considered as the income, total B is considered as a expenditure. These things you have to keep in mind. Then friends, next is very important, that is number third. We have to find out profit or loss. Profit, sometimes bank can earn profit and sometimes they can suffer losses. So first of all, we should write here profit for the year. We have to write the profit for the year, and sometime loss, the loss for the year. How we will calculate profit for the year and loss? So this total A minus total B, whatever amount come, it is considered as a profit for the year. For the year means current year profit. It is a current year profit, and this particular profit we have to consider while preparing profit and loss account. Then friends, after recording this, next item is profit or loss brought forward from balance sheet. Profit or loss brought forward from previous balance sheet. And this particular profit also we have to consider. So see that friends, how we will prepare our profit and loss account, and we have to find out the total of the current year profit and this total of the last year profit, this total. So there are, how many totals are there? Total means the incomes total. First of all, we should find out the interest on other income. Interest on schedule 13, other income schedule 14, this total. Then expenditure, interest expended schedule 15, operating expenses schedule 16, of provisions and contingency, there is no schedule. The schedule, we will not write any kind of schedule. These are blank. These things you have to keep in mind. then total. Then after that we have to find out, the profit or loss earned by bank. And the bank's profit or loss earned, that how we will find out. So A minus B, total income A minus B means total expenditure. So we will earn current year profit. Eh, From this current year profit, we will consider last year, previous year balance sheets profit or loss, that we have to add it. If it is loss is there, that we will deduct it. So this total will come. Then friends, we have to consider fourth part of the profit and loss account, that is appropriation. And one more thing that you have to keep in mind, under banking company, appropriation is the part of profit and loss account. In company account, appropriation is not a part of the profit and loss statement, but in banking company, under profit and loss account, appropriation is the one of the part of profit and loss account, that we have to find out. Now appropriation includes first item, and it is very important, that is transfer the statutory reserves, some 25% amount of profit transferred to statutory reserve, that we have to find out. Now friends, this 25% profit we have to consider, we have to find out by this particular current year profit. We have to consider about the current year profit. From this current year profit, if it is there, this current year profit, on the current year profit, we will find out the 25% value, and this 25% value we will transfer to statutory reserve account. It is compulsory. It's a compulsory. Every banking company must transfer 25% amount of profit to statutory reserve account. Then after that, if any other reserves are there, it is generated, that we should write here. Sometimes general reserve is there, that we have to write. Whatever reserves provided in our problem, that we have to show. Then friends, propose dividend. Propose dividend, it means the final dividend. Proposed dividend comes under appropriation. It is a current year dividend, and it is calculated on paid up capital. It is calculated on paid up capital. It is calculated on paid up capital. Whatever banking companies paid up capital is there, that we have to see, and that particular capital we have to find out the percentage they decided, the dividend percentage. If they decided 10% proposed dividend, 10% proposed dividend we have to calculate on paid up capital. So these things you have to keep in mind. Then after that, we have to find out balance carry forward to balance sheet. Now, how we will find out the value, that you should know about this. You should keep in mind these particular things. How? First of all, total. Now, friends, one thing you have to keep in mind. Profit and loss total, this total and this total always equal. This you should. So one thing you have to keep in mind, profit and loss, this total plus this total, it is equal. It is equal. These things you should know about. Total of profit and loss, this total and this total should be equal. Suppose here 5 lakh is there. Here also we have to keep 5 lakhs. Then these three digits we have to deduct, and whatever amount balancing figure is there, whatever amount balancing figure is there, so it is considered as a balance carry forward to balance sheet. So see friends, this total, from this total we have to deduct these three amounts, and remaining amount we will transfer to balance sheet. And always keep in mind, profit and loss, this total, and appropriation, this total should be equal. Both the total should be equal. That if it is a 5 lakh, we have to keep here 5 lakhs, and these three items, if it is there, that we have to deduct, and rest of the balancing figure, it is transferred to profit and loss account. These things you should know about. So these are simple our profit and loss account is there. Profit and loss account, how we will prepare, what items are there. So it is always divided into four parts, and first part is the income, second part is expenditure, third part is profit or loss, and fourth part is appropriation. So I hope you understood the things how we will write. Now friends, we will discuss we will discuss again the part which is very important. Now we have studied about the
हमारा नाम 25 साल से भूखा है
now we will study here provisions and contingency. It is very important. First of all, we should know about the provisions and contingency. Provisions and contingency, it is very important. Now what kinds of provisions and what kinds of contingencies are there, that we are going to learn. Now friends, as you aware about, there is no schedule for provisions and contingency. So we will write here provisions and contingencies. There is no schedule, there is no schedule number also, but it is a part of our profit and loss account. Now under provisions and contingency, we will write provision on bank advances. Provision for bank advances. Now, bank advances means what? It is just like a NPA. It is just like a NPA. NPA means non-performance assets. Sometimes bank provide the loan. Bank provide the loan to the customers, and there is a particular provision. There is a particular advances for provision. It will consider as a provisions and contingency. A loan, basically loan, is considered as a non-performance assets, and that we should keep there. Then after that, friends, then a provision for doubtful, provision for doubtful debts. Now, generally, banks are not producing any kind of goods, and banks are not selling the goods, but still they have some doubtful debts. Such doubtful debts we will put as a provision for doubtful debts in our provision for contingency. These things you have to keep in mind. We will keep the provision for contingency. Why we will keep the provision for contingency? Because of there is no part in profit and loss. There is no schedule, but it is a part of the profit and loss. And first, if it in our problem, if they are provided provision for bank advances, so it will come under provision for contingency. Sometimes doubtful debts provision is there, that we have to keep separately. Sometimes it is a very important element, that is a provision provision for tax. It is very important, and how we will calculate the provision for tax, it is very important whenever we will talk about the final account of the banking company. Now, whenever we will talk about the final account of the banking company, and we have to find out the provision for tax, the how we will calculate. So first of all, we should consider income. We should consider the income. Income part, it is a part, this total. This A part total, we have to consider A part, that is the income's total, that we have to keep as a part. From this income, we have to deduct schedule 15 and schedule 16. Schedule 15 and schedule 16. Now schedule 15 and 16. The 15 belong to interest expended, and schedule 16 belong to operating expenses. This 15 and 16 we deducted from this income total. Then after that, friends, we have to deduct we have to deduct this number one, provision for bank advances, that we have to deduct. We can put as a here NPA, and we have to deduct provision for doubtful debts. Provision for doubtful debts. And after deducting these all these things, we will get we will get profit before tax. We will get profit before tax. So how we will get the profit before tax? Income. Income is total of the interest earned and other incomes. This is a part. We have to consider. We have to deduct schedule 15 and schedule 16. Schedule 15 and 16 belong to interest expended and operating expenses. Interest expended and operating expenses, that we have to deduct. Then we have to deduct under the provisions and contingency whatever items are there. Sometime it may be provision on bank advances, and provision for doubtful debts. If it is there, that also we have to deduct. The rest of the value, we can say that profit before tax. From this profit before tax, we have to find out the whatever percentage of the provision for taxation, and that we have to write. The provision for taxation we will find out on profit before tax. But how we will get the profit before tax? Total of the income minus schedule 15, schedule 16, and then we will deduct provision and contingencies items, bank advances provision and doubtful debts provision. Rest of the value, we can say that profit before tax, and on that we have to charge tax liability. So it is considered as a provision for tax. I hope you understood the this important point, that is a provisions and contingency. And provisions and contingency, it is a part of profit and loss, and it will always record it after recording the schedule number 15 and schedule number 16. We will keep here, and it is a part of the profit and loss account. I hope you understood the provisions and contingency. Now, friends, we will discuss important part, that is interest on other income, interest expanded, operating expenses. How we will write? What do you mean by interest on? What do you mean by interest expanded? And operating expenses, that we should know about these things. We have to take clear pictures why we will write these things. Now, friends, now let us consider about, we have a one bank. We have a one bank, ABC Bank Limited. It is a one of the bank. Now, this particular bank, what they are doing, what is the basic activities? So they can take the customers, they can take money from the customers. How they take the money from customers? By deposits, by way of deposit. Suppose I am a customer, I want to go to the bank and apply for any deposit account, sometimes saving account, current account, fixed deposit account, or recurring deposit account. If I want to become a customer of the bank, I should take any particular deposit, saving bank, current account, and these are particular deposit. These are particular deposit we have to consider. And bank, what they will do, they can take the money from customers. This is a basic activity of the bank. Now, another basic activity of the bank, that is they give the loan to the bank. How they will give the loan to the they will, to the customers, not a bank. They will give the loan to the customers, outsiders, by way of bill discounting. Sometimes they will give the cash credit to the businessman. They will provide the overdraft facility to the traders, those who are businessmen. They will give the term loan, housing loan, personal loan, car loan, and sometimes they will give the advances, top up loan. Here, banks activity provide loans and accept the deposits. Provide loans and accept the deposits. So this is a activity This particular activity, we can say that it is accepting the deposits and providing the loans. This is a particular important activity of the bank, and from this bank important activity, now we can say that which activity they generate. They generate the liability, they generate the assets, that we are going to talk. What we have to talk about, the which activity they generate liability and they generate the assets. So friends, one thing you have to keep in mind, whenever they accept the deposits, they generate the liabilities. Whenever they borrow or they provide the loan, they give the loan, they generate the assets. So this activity for bank, it is an assets activity. This activity we can say that it is a liability activity, because if I take the deposits from the customer, it is my liability. If I give the loan to the customer, it is my asset. So these things you have to keep in mind. You should know about these things. Now friends, whenever, if I deposited any particular bank, I will get the interest from bank. So bank paid interest. So it is called as a interest expended under schedule number 15. And if you see that, the if I borrow the loan from the bank, so bank receive the interest. So it is called as a interest earned, schedule number 13. It is called as a interest earned. When we call it as a interest earned, whenever the bank receive the interest. The interest expended, when we call it as the interest expended, whenever the bank give the interest, bank paid the interest to the customers. When they paid the interest, whenever they accept the deposits. When the deposits accepted, bank provide interest to the customers. Whenever the bank borrow the loan to the customers, that time bank receive the interest. The interest on, whenever the provide the loan, it is schedule 13. Interest paid, it is interest expended, schedule 15. And other type of expenses are called other expenses or operating expenses, schedule number 16. And other type of incomes are called other income, schedule number 14. So I hope you understood. So these are particular things, if you understand, we can easily understand the how we will record our profit and loss account. Yes, do you have any doubt regarding this particular system of the bank? So you should know about the when they accepted the interest and other incomes. Interest earned whenever they borrow the provide the loan. They give the loan. They are not borrow, they provide the loan. Interest expended, when interest expended means paid. When they pay, whenever the deposit they accepted, accept the deposit, paid the interest. Then give the loan, earn the interest. Loan give, interest earn. Schedule 13. Interest expended, interest paid whenever they accept the deposit. Saving deposit, recurring deposit, demand deposit. These are the things are there. that you have to understand first. So I hope you understood this profit and loss. Okay, now friends, I will take the 10 minutes break. We will come again and we will discuss about the how we will solve any particular problem regarding the banking company's final account. And especially we would talk about the format of the profit and loss. Okay.